Hi, everyone. My name's Alexis McCafferty, and I'm here to talk to you about the importance of asset protection in the context of your financial planning needs. So, what asset protection essentially does is it prevents financial loss. It ensures that no matter what, if life throws you a curveball, you're going to be okay. There's a couple different ways that we can audit one's insurance needs and just make sure that they have the proper protection in place as they are starting to build and grow their wealth and their assets, right? And in the context of this, there are a few main insurances that we always want to see people have or they're starting to incorporate in their financial plan as they do grow their assets. So the first one is life insurance. Now, who does life insurance make sense for? Well, if you're considering purchasing a house, it probably makes sense for you. If you have any sort of large balances, large loans on the balance sheet, we do want to make sure that if something happens to you, we're able to pay them off free and clear. As that, we'll be able to then transfer those assets onto the family and whoever may be living in that home if it is in fact a home situation. Now, in the context of life insurance, there are two main types. You can either rent your insurance via term insurance, or you can own your insurance via permanent insurance. Now, it's very similar to renting and versus owning a home. For term insurance, what you're doing is essentially paying a premium to an insurance company and ensuring that if something happens to you, if you pass away prematurely, that insurance company would then pay out that sum of money tax free to the beneficiary. Now, who does this make sense for? Makes sense for a lot of people. In order to keep costs low, you're able to get a big sum of money for relatively cheap. So I'll share with you my personal policy. I pay $34 a month for $1 million of death benefit. Now, if I pass away, my family would then realize $1 million tax free, right? So that is the term insurance. Now, when we're talking about permanent insurance, you can think of it very similarly to owning a home, owning real estate. What happens is the death benefit, number one, it's yours. It's yours forever. As long as you make the premium payment, it is going to be yours. Another thing is that the death benefit, it actually grows over time, very similarly to property. Oftentimes, what we're seeing is property will accumulate in value, and that's the same with the death benefit. Now, there's also a living benefit associated with the permanent insurance as well, and that is in the form of a cash value. Now, insurance it benefits from tax protection, so the cash value that is held within that policy can be accessed on a tax-free basis if you structure it properly and if you access the money properly as well. So, life insurance is very important in the context of protecting your financial plan and just making sure that we have that contingencies in place if something happens to us, so it doesn't financially destroy our family and really what we're working so hard to build. So, beyond life insurance, there is another type of insurance that a lot of folks don't really know about, and it's called long term disability. Now, this is oftentimes a benefit that is offered through your work benefits. So, there's short term disability and there's long term disability. Really, the main difference is how long you're able to actually collect that. Insurance payout for. Now, at its core, disability income insurance it protects your income. It will literally pay you a paycheck if you're unable to work due to accident, illness, injury, whether the event happens in or out of work. This pays you your income. Now, for long term disability, really what we're trying to protect against is long term financial loss. So, if we're sick, ill, injured, we can't work, and we have a mortgage on the balance sheet, well, what's going to happen if we can't make our mortgage payment? That's a huge risk that we want to make sure that we're safeguarding against early on as you are starting to entertain purchasing a property, or maybe you already have and you don't have this benefit in place, or you don't really know how it works. It is one that we always encourage people to opt into through work, and then um, look at your resources to be able to supplement that gap, because your work is never going to offer 100% of your pay covered. It's not advantageous for any job to cover 100% of your pay for a long duration of time. So it might be worth considering getting a supplemental policy that would essentially close that gap and make sure that if anything happens to you, you are going to be made whole, and we're not going to be, having any sort of financial devastation due to loss of income. Now, the third insurance that is definitely worth considering as we are getting older is long term care insurance. And again, people are doing a really great job in saving for their retirement. They have their 401k, they have their Roth IRA, but they're not really considering what would happen if a long term care event would come up. Now, what people are having to do if they don't establish this proper protection in place is drain their retirement savings, and that can be financially destructive all on its own. So, having adequate long term care insurance as we age just make sure that we'll be able to be cared for adequately, and we're not having to rely on our children or the state to be able to do all of that, because that can be a really big burden on our resources. So those are the three insurances that is worth paying attention to and incorporating in your financial plan if you haven't considered it already. And now the other way that we can incorporate asset protection mechanisms in our overall financial plan is just having asset diversification. So I always tell my clients, like, we don't want to be putting all of our eggs in one basket, no matter what it is. I want I want you to think of your financial plan like we're baking a cake. And when you bake a cake, you have your flour, your sugar, your water, your baking powder, your baking soda. All of the different ingredients essentially should do one thing, and they should do one thing really, really well. So we don't want to only have a couple things in our financial plan and hope that those will accomplish all of our objectives, because that's really not how we can be efficient in our planning. So, by creating diversification, not only amongst what type of assets we have in our portfolio, but also what the way in which we're investing within those assets can go a long way in just making sure that we have options. When the market's up, we're participating in that. When real estate's up, we're participating in that. And when the market's down, we have other assets in place that we can then leverage. So we're never in a position to have to take a loss. Now, one major building block to every financial plan is to have an adequate emergency fund in place. And now I always get asked, like, how much is too much cash? Some people I see, they're holding on to a lot of cash. They say cash is king. And then some people are not holding on to enough. And now the rule of thumb to follow is 3 to 6 months of your fixed expenses. So what I want you to do is create a budget sheet and say, like, this is how much it costs to live my life from a fixed monthly perspective. My mortgage, my insurances, my gas, my groceries, everything you need just to survive. Now, I want you to take that number. Let's say in this example, it's $5,000. So we take that $5,000 that really essentially goes to all of our bills, and then we times that by three to get 15,000. So that would be the minimum that I would want to see someone have in their emergency fund. And then the maximum would be upwards of that $30,000, right? Now, some people, like I said, they really prefer cash. They want to hold on to a good amount of cash. And, I think there really is a sweet spot that we can strike when it comes to figuring out how much cash that we should keep on hand. And then when it's time to start leveraging the market to be able to really grow your portfolio accordingly. So emergency fund is very, very important, making sure that you have strong awareness over your company benefits. And if you're not really sure what to look for, reach out because I know exactly what to look for. I comb through benefits all the time. That's my job. I can look for keywords and I can essentially break it down and try to re-explain it in a way that is digestible for you and audit your insurance needs and make a recommendation on that. Now, what is it that I do? So, I'm a financial advisor. I run a financial planning practice. And essentially, what I do is I help build and implement financial plans for people depending on what's important to them. Asset protection is undoubtedly a very, very important piece of what I do. I always start there because I'm never going to say, hey, you should go invest in this really risky thing if we don't have cash flow on hand. Like, that would be backwards. So, asset protection, investment strategies, diversification, budgeting, just making sure that we have all of our ducks in a row and that we're constantly tracking and organizing our assets for long-term success. So, if you have any questions, don't hesitate to reach out. Alexis McCafferty. I will have my email address and my phone number attached to this video. I hope this was informative, and I hope everyone is enjoying this presentation so far. Take care.